on May 22nd, Borr Drilling came out with the earnings report and the conference call. I've read them both. I've looked at everything. I made a little nice presentation for you if you want to take a look at it. Perhaps by the time I'm finished with this and giving you my opinion on what's going on right now, maybe, just maybe, it will help you make a decision. Should I hold? Should I buy? Should I dump all my shares? What should I do? Well, Borr Drilling, as you guys all know if you're watching this video, is an offshore rig owner. And they rent the rigs out to big oil companies to generate revenue. And then they cover their expenses, hopefully, with that and generate some profit. They then try to turn that profit over to us as investors in the form of dividends. But right now, they've halted that, and I'm really glad they did. A really cool and easy way to take a look at their positioning on the globe is by clicking over here on their fleet tab in their main website. And you can see where the rigs are positioned. They have 7 here in and around the Gulf, and then 1 in South America, 5 around Africa here, especially Western Africa. On the east side of things, we got 3 near Saudi Arabia, Aramco there. They have a joint venture there with Aramco, and 7 now in Southeast Asia. Southeast Asia has been proven to be a more liquid and more in demand part of the world right now. They're experiencing more population growth, etc. So the need for rigs is higher. So they're trying to transition from the Middle East to Southeast Asia. Okay, now here is my infographic. Hopefully you guys enjoy this. I've put together all the all the key features of the presentation, the conference call, summarize them in what I think is important. Number 1, the active rig this quarter is 22. Total available liquidity is 320. That includes 115 revolving cash. 115 cash and 170 in a revolver. Here's some highlights of the quarter. Obviously, it was a bad quarter because of the inactivity in Arabia and in Mexico, the suspended drills. Everybody knew about that. The stock crashed by like 60%. However, the cash flow, increased by 120 million. They received some money from Mexico that were owed, and now Mexico looks like to be a recurring client and in good standing thus far. Here's a little bit a difference between all the active rigs from last quarter and the active rigs that will be happening this quarter. So we're going from 16 to 22, which is an enormous rebound. So that's fantastic. The second quarter I'm expecting to be profitable. If this one with all the suspended rigs turn out to be -7, 7 cents per share, I'm expecting the next quarter to be possibly positive 5 cents. Positive 5 cents per for the quarter, maybe even more. Depends on some of the rates and some of the operational stuff that they're doing, but that's my guess. Here's the numbers that they're giving us on the conference call. For 2025, the coverage is 79%, which is pretty weak. I made a video not too long ago that takes a look at a long-term perspective of the company and how much revenue and how much utilization the company would need in order to survive, let alone make a profit for all these years. And the point of the videos is not to judge this company and hold it for 50 years, but it's to justify its existence on a year-over-year basis. Okay, how much utilization do we need at what price in order to try to figure out if this company is even worth buying right now? So they have a 79% coverage on 2025 already, and by estimation they need at least 75%. So they're covering that, and they already extended some contracts into 2026. So we have 35% coverage in 2026. We have 65% more available. The backlog at the moment is 1.38 billion. They added 221 million worth of new contracts to the backlog. So the backlog keeps increasing at a pretty steady rate. Obviously, these rates can be marked down or up depending on what the market dictates. Key highlights. the market demand for jackups is somewhat healthy at the moment. I made a comment that I think the company is kind of riding really well, but on thin ice at the moment, because the market could drop underneath them at any moment, and the company can basically go into huge losses, if not bankrupt, if the market rates for the jackup rigs decides to plummet along with the oil price. But so far we have not seen that, and we don't know if it's going to happen because inflation is up. And looking ahead, my theory is that nations are going to be looking to secure like their own oil production and not be relied on other nations, with kind of like an increased global nationalization trend. And so I think that every nation, like Mexico, for example, and Southeast Asia, etc., are going to be looking to hire out their own rigs and not be dependent on imports. That's my, they're going to be looking to bolster their own local oil producing companies. That's my reading of the whole situation. So these are the highlights, and the biggest one, of course, is the decision for Borr Drilling to not distribute money in dividends. That's the key highlight that everybody is obsessing over that follows this company. I think it's a great choice. I actually wrote to the company maybe last year, November or something like that, and I was wondering why they keep distributing, why they're so fast on distributing money to in the form of dividends if they have this hurricane coming in ahead. We all knew that rigs are going to get suspended. The market was going down, especially late in the year. So I wrote them like, why aren't we like paying off debt? There's a huge mountain of debt. The value of your company is going down, and the ratio between the debt and actual, valuation of the company, that ratio is just exploding. And I think it's time to actually reduce debt to keep that in check with the actual reality of what the market's telling you, rather than the assets that you think you have. Because everybody's saying like, all right, and I'm sure the management's thinking, okay, yeah, we have a bunch of rigs, we can sell those for 150 mil each. They're kind of modern jackups. Recently, Valaris or something sold like a 27-year-old rig for 108 million. That's a crazy valuation for a 27-year-old rig. I don't know what the specifics are on the sale. I don't know how healthy the rig was, and what in what condition, how much repair or maintenance it's had, etc. I don't know any details, but that's a pretty high ticket price. And I know relative to other companies, Borr Drilling has a more modern fleet, so I'm sure they could fetch some money. But if you try to liquidate the company, introduce all the supply in the market, you're not going to get that kind of pricing. This kind of pricing only works if there's one or two rigs in the market at a time, right? So if you decide to liquidate, it's going to be a long, tedious process, and it's going to keep driving the value of your rigs down if you have to mark down every single rig. So not a good idea, right? So they have to try to swim it out, and the only way to swim it out, no pun intended, sorry for using the word swim, but is to reduce the debt burden, or at least what they're doing now is way better than distributing it in dividend. It's adding survivability by stocking up the cash pile. They have an excuse that we want to be versatile, but really, I would much rather see them put that into short-term treasuries and collect that 4% on that cash and just keep stockpiling cash to offset some of the interest that they have to pay on their debt. That's fantastic. And then if the market really turns around and start pumping money out of all the places, they can distribute that in a dividend. But I think, in my opinion, we're really far away from that. I mean, we're like one bear market, one year bear market in day rates from bankruptcy. Not even a year, 6 months of decrease, maybe by 20-30% in day rates, and this company is just completely unviable, especially when you consider the risk of all the deactivations that have been going on and could go on in the future. So, getting rid of that portion of that debt, I think, is a really good idea. And what they're doing now is like the second best thing. If it was me, I'd try to go out of my way and try to jigger some of the situation with the current debt, and maybe get rid of some of that if its rate is a lot higher than obviously the 4% rate that you can get for free right now from short-term treasuries. But who am I to say anything? I would just feel more comfortable as an investor, right? And this move to hoard cash, to me, it shows a lot of promise. And before they made that move, I made the mistake of selling a little bit of stock at a loss. But no worries. I've sold puts to purchase maybe like 50 grand worth of stock by December gradually over the course of time. I've sold the 2.5 puts, which are basically the only thing available in the market that you could sell. The bid-ask spread is a little bit wide on that, so I didn't get as good of a deal as I'd like, but I'm probably picking up like 15 cents or 5 cents worth of value there for a better price. But really, this company, if it does do well, the price could double like really easily, or triple or quadruple from here. I mean, it was $6, $7, $8 just a year or two ago, a couple years ago, right? So it could go up back up to that price. It's not like they've gotten rid of rigs, they haven't lost their fleet or anything like that. They actually, they have 22 active rigs right now. One of them is brand new. They have a relatively new ones. The rest of the fleet is a couple years older, but that's fine. It's not too big of a loss. So the hoarding cash to me is just a brilliant idea for right now. Like I said, I would probably try to use that cash and try to reform the terms of my debt agreement, but they're happy with their scheduled payoff rate at the moment. They are paying the debt down on a scheduled basis. What I'm worried about is if they see an uptick in the market and they're like, oh, we have all this cash here. Why don't we buy another effing rig? That's what I'm afraid of. So they said they're not going to expend a lot of money on the capex this year. That's fantastic. I want to see them really bolster the health of this company before they think about redistributing money again. I mean, to me, I would rather see 25% of the debt be gone before they even think about redistributing, because their fleet is aging. The cash flow is not as strong as it once was. Plus, you need a buffer to account for some of the downside. They bought these rigs out of other people who were troubled and were in bankruptcy. Why do they want this to happen to them again? I mean, this industry, in my opinion, should be running close to cash basis. All this go in debt, buy up distressed assets, and think you're creating value out of thin air. It's not that easy, right? At least it seems like they're managing everything well. That's where the value is, in the management, not necessarily in the rigs themselves. So if you're buying this company for the rigs, I think that's a mistake. If you're buying it for optionality and good management, that's probably a better argument. That's the reason why I'm buying. So as soon as I see that there are poor decisions being made, which is not the case right now, in my opinion, I'm out. But just again, I want to clarify, I'm no expert here. I'm a complete generalist. I am not an expert in offshore. I'm just telling you what it looks like from the outside. I'm not inside day to day, but in my opinion, from my observation as a generalist for years now, is that the people who are on the inside and they know all the technical ins and outs, they get delusional, right? They get a little bit delusional, and because they know they have all the technical knowledge and all the ins and outs and insider knowledge even, they start believing a story and they're always optimistic, right? Doesn't matter at what point of the cycle you are, they're like, oh, we can make this work. Oh, this makes sense. We can make it work. While the earth is just disintegrating underneath them, right? Well, there's a sinkhole developing. And so doesn't matter how much technical knowledge you have. I think if you're not able to see things from an outside perspective, you're going to make a lot of mistakes. I had a similar experience with mining companies, silver miners, gold miners, etc. It's during the whole downturn in 2011, for example, from 2011 to 2015, they were all optimistic. The only time that the miners were starting to to get defensive is 2015, right at the bottom. That's exactly when they started to be defensive. It was dude, you should have been defensive the entire time, and you should be opportunistic then at 2015. So I bought a bunch of silver miners in the 2015 and made some money off of them, but they were such a shrunken company by then. They've crippled their ability to produce silver and gold so much that the rebound wasn't nearly as massive because they had to destroy so much value to stay alive while burning up, cash in order to mine more and more gold at less and less profit, at a negative profit, right, at a loss. So I don't want the same thing to happen to these offshore companies. What if there's a protracted bear market? I mean, the oil price isn't going up; it's going down. Sorry, like newsflash. I understand your costs are going up, but that's even more dangerous, right? If your costs of operation are going up because inflation, employees require more money, you gotta pay compensation, whatever, right? All your input costs are higher. But that's exactly why you need to be on the defensive. If the product that your clients are mining is going down in value and expenses are going up, like you should be freaking out. So hoarding cash, to me, I don't think they're panicked enough. I don't think they're freaking out enough. They need to be more panicked. Is my takeaway. Like, yeah, if we have an uptick in the market, fantastic. You have 400 million in cash. Get rid of 50 million or whatever the dividend's costing you. That's fine. But if you only have 100 million, getting rid of 50 million is not that good of an idea. You know? So anyway, that's my rant about this whole situation. Let me know if you own Borr Drilling. Like I said, I own a little bit. I'm going to be buying probably another $50,000 worth of shares at 2.5 strike price by December, gradually. So let me know what your position is, what you think about the company. Am I making sense here? Like, if you're a specialist in the industry, I really want to hear from you. Like, write it down in the comments. Hell, let's have a phone call. We'll tape it. We'll post it for people to watch if they want to. But I really want to know if I'm making sense here to you or not. All right, peace.